Archie, and thank you for joining us. It's great to have you with us for the first of our post-trade perspectives. And to kick off this series, I wanted to look at the state of the securities services and post-trade industry and some of the big trends that have been impacting it. We thought it'd be great to kick off with you guys from Oliver Wyman, because ISSA, which I chair, as you know, and Oliver Wyman this year published an extensive piece of work on the future of securities services. And there were quite a few themes that came out of that research. One of which, one of the most important ones, was changing investor behaviour. Could you give us a little perspective on what we mean specifically by that?
Yeah, and hi Phil, great to be joining you for this discussion. Certainly a topic that's close to our hearts. We've been working extensively with ISSA on this for the past couple of years really now. And when it comes to changing behaviours and the needs of investors, I'd say that two of the biggest trends we've seen in this regard and that really came out are the shift towards passive investments in ETFs, as well as the increased focus on ESG and the formalization of these requirements into the capital markets ecosystem. And what's come out clearly in our discussions with participants on both sides is that both of these trends already mean that post-trade players need to adapt and improve their services to best position in an evolving market that serves a modern investor community. And more specifically, I would say that the continued flow of assets into passive funds, strategies and ETFs has lowered revenues for the industry. And we would see this as a trend that does look set to continue. Whereas on ESG, post-trade more than ever now needs to support the ESG transition by providing increased transparency and reporting services for ESG investors, as they now are more aware of the susceptibility of certain sectors to macro risks such as climate change, and will consequently shift portfolios, strategies, etc., to be less vulnerable to those risks as they see them.
Yeah, I think that, we're all fascinated to see how this ESG theme develops. It's obviously been something which is really prevalent, certainly for the last couple of years, and it really feels like it's gaining momentum now. Without wanting to pull the cliche too far, they do feel like environmental factors, that the shift to passive, shift and the ESG question. But can we talk a little bit about intrinsic factors as well, which is some of the things that came out of that research? I think one of the most important and interesting elements of that was how the industry adapts and evolves to the new technologies which have emerged or which are emerging. There's an increased focus on digitization, and everyone's been talking about how distributed ledger technology has the opportunity to go mainstream. What do you think these technological changes mean for the industry, and how far along do you think we really are in terms of doing something meaningful with them?
Yeah, absolutely. So I think digital assets themselves have seen a huge increase in demand from investors, and we're really only at the starting point there. And there have been some high-profile announcements from established infrastructures and post-trade providers in recent years around participation in this space. I think the industry in general is steadily developing new products, services, supporting infrastructure for the digital asset ecosystem, and that journey is underway. And on the one hand, this really does open up new growth paths with attractive margins for security services players who can afford themselves to invest in the required infrastructure and risk management that it takes to play in this space. But on the other hand, there is the risk that this will leave others with a shrinking pool of assets under custody and administration in more traditional assets that are competing with some of these new digitized asset classes. So really, we'd expect that it's those firms that are able to invest heavily in this space, to be creative and to double down, are those that are going to be well positioned to grow in the securities industry's digital phase as we enter into this new space. So in our view, look, it's a huge shift. It's certainly underway, and it's not one that we see receding anytime soon.
Yeah, look, I think we agree. I think that move towards this new digital asset class is, from our perspective, an inevitability. We have a firm conviction that DLT will also revolutionize the markets. We think that it does a couple of things. Firstly, it gives us an opportunity to have a completely new approach to data management and the way that we share data. And secondly, of course, operational efficiencies are obvious when you think about things like smart contracts, real-time data, and those kind of things that it delivers. So we're pretty excited about it, and we know that, as you say, a number of exchanges are embracing DLT. We think that the future change to our industry, to the post-trade industry, is going to be really significant, and we really feels now that we're at an inflection point after some years of talking about it, that it feels like something's actually going to happen.
Yeah, look, I think it's a great and important point, Phil, and one that feeds nicely into one of the other trends that we're really seeing squarely impacting this space and the participants within it, and that really is the ability to adopt and make the best of new technologies that are available to firms in this space. I would say generally the capital markets ecosystem has a pretty proud history of innovating and adapting to change over time, and the need to do so now is greater than ever. People need to move quickly and stay with the times. And so new technologies like machine learning and AI, the deployment of DLT, cloud technologies certainly are either already underway or on the brink of moving from the sort of experimentation phase to the wider adoption stage. But in order to implement these, established players are going to need to fund significant upfront investments before they can reap the potential longer term upside. I think given the reality of the economic backdrop of single-digit growth, margin compression that many security services firms have faced in recent years, this is going to require significant strategic conviction from both boards and management going forwards.
Yeah, I think that's also a big challenge. You know, when we look at the research that was done, that dealing with that cost issue is a significant challenge for the industry, and cost not just being the cost of operating, but the investment costs required to stay where we are. With that in mind, do you see new entrants coming in? Do you see big tech invading the post-trade space, or is it an area that Oliver Wyman doesn't believe that they've got that much interested in getting involved in?
Yeah, I mean, look, I think that the most tangible use cases for that kind of an entrant are going to be around increasing efficiency of highly operationally intensive processes and finding new and innovative ways to serve the client ultimately via new technologies or deployment of more efficient solutions. Ultimately, those help lower the industry cost base and provide a new operating rhythm and methodology for a traditional process. I think one of the challenges in this space has been that often cost savings have been passed on to the end client, and as a result, margins have stagnated or declined over the long term. I think this plays a dual role. So on the one hand, it affects smaller players who lack the required scale to operate and fully benefit from a margin that is tight. But it's also, it makes it even more crucial that the benefits of new tech can be monetized and accrue to security services firms themselves. Otherwise, I do suspect that the participation of big tech or other technology challengers in a disruptor or challenger capacity could well ramp up in the midterm in this space.
Yeah, I think you're right, and I think that that we will start to see further bifurcation. We've seen M&A activity, in fact, in our industry. So, I think we're going to continue to see that squeeze on the margins. We can't close without talking about regulation. It's been a huge feature of everything we do since, especially since 2008 when we had the global financial crisis. And with all of these new things coming along like ESG and data and operational resilience requirements from regulators, I think it remains to see to what extent data regulations will be drafted to guide adoption to these new trends. But we know from previous experience that regulation's coming. And it will be greater than it was yesterday. How do you see this, the regulatory agenda, and what its impact might be on the industry?
Yeah, so look, I think the impact of regulation is something that everyone in this space has continued to remain cognizant of, and I think needs to. Whereas there was a broader raft of post-crisis regulation that has impacted the space and largely been implemented to date, I think in particular what we're seeing now is some quite specific requirements in the post-trade and security services space in some of the key areas you've mentioned that are going to drive the investment agenda and shape some business opportunities. And those relate to things like operational resilience, data management and privacy. I think that EU directives around ESG and sustainability requirements are going to continue to really push the envelope in that direction and promote standardization around data usage, reporting, key methodologies and approaches in that space. I think there's a bigger question around the regulatory agenda as well, which is interesting on the strategic side, which is, to what extent will policymakers worldwide continue to tackle these problems in a joined up fashion, or will we see an element of nationalist approach? And I think why that's relevant really is that when we think about, the regulation of digital assets or authorizations of businesses for specific capital markets activities, the alignment or misalignment between national regulators worldwide could play a really critical role in informing the way that certain market structures develop globally. and potentially, have a something to say in the conversation we've just had around big tech disruption, and whether that is a viable near-term, challenge, threat, opportunity in this space. And I think, the regulatory side of this is one thing. We should probably also look at one of the things that's impacted the world for the last year and a half at least, that being COVID-19. We're still only just coming out of it. A lot of us are getting back to the office now, but there's a lot of uncertainty that pervades. I guess a question back to you, Phil, is what's your view on the early lessons learned for you, your organisation, for the industry at large that you're taking out of the last 18 to 24 months?
Thanks, Archie. It's a great question, and I think that I'll try and avoid cliche, because it's been a topic which nobody's avoided for the last 18 months. I think it's had a devastating impact on a lot of industries. We're very fortunate that we operate an industry which is electronic in nature, and that we've been able to continue in quite a seamless manner. So I feel really grateful that we've been able to do that. For the industry, I think there have been a number of critical lessons. I think we've shared best practices around digitization better. One of the things we need to make sure that we do is keep those best practices operating. I've started to see a slide back to some of the old manual processes, and as an industry, we need to keep pushing on that to improve our digitization. I think we've shared best practices around implementation of regulation and operational resilience. Again, because we're also codependent upon each other, that it's been critical that we've done that. So especially cyber resilience has become a big issue. And your comment earlier about global coordination, I think cyber resilience, crypto, and the bounce back from COVID really needs global responses, not national responses. And I think the future of work is different. It's yet to be seen whether it ends up being a 2, 3, 4, 5 day week for most people. Who knows what that's going to look like in future, but I do think the future of work will be different. People have become accustomed to a different rhythm, and we've deployed technologies for our work that weren't there before, which have proven that we can operate remotely. So yeah, I think there are some changes that will stick, and that will be there forever. I also think we need to get back to some kind of normality, and thankfully we're starting to see some of that now with in-person meetings, business travel again. You can't exclude the human element from the industry that we're in, and it's really important, and we need to get that back.
Agreed. And I think what we've seen is hugely significant as a shift for the financial services industry more generally, and really the ability to provide employees with some more flexible working options. That feels to me like it can only be seen as a benefit as long as it's appropriately managed. But as an aside, I guess on the risk management side of things, it really has called into focus some of the key areas that capital markets players have been working on post-crisis, and this is a different type of business resiliency challenge that a lot of businesses in this space have risen up and met admirably in our view. So yeah, an interesting case study for future generations to have a look at.
Yeah, and I think it could have been much, much worse than it was, right? And I think that the industry needs the whole of the financial services sector actually needs a little bit of praise for how well it coped with the change that was pushed upon it. Well, actually, listen, it's been great talking to you. Thank you so much, and to you and to the wider Oliver Wyman family for giving us the time and giving us your insights. It's really terrific. We covered a lot of areas in quite a short space of time. I think over the course of the next few weeks, as we do more of these videos, we'll be going into some of these areas in more detail, but we wanted to kind of create a broad brush based on that piece of work that you did with us earlier in the year, and I think it's been terrific. So thanks very much. Really appreciate the insights, and thank you for the time today.